Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Thursday, the 28th of March. Starting off with the S&P, which is making progress within this rather unlikely formation. It looks like a rising wedge, which is normally negative, but we keep bouncing off it and going to a narrow range. Presumably at some point it will go pop, but which direction that will be is obviously yet to be decided. At the moment, though, what we have is 51.90, the uptrend line from October, and 53.30 as the potential target at the resistance line there from October. Above 53.30, we've got a possible 5,500 maybe by the end of May, something like that. On the downside, not expecting anything lower than 51.80, which is basically mid to late March resistance for support rather for this market. Moving along to the Nasdaq, and here situation equally as improbable as the S&P. The main evidence for that is the way that we haven't been below the 50-day moving average since the beginning of November, which must be some kind of record. In terms of the lay of the land in the recent past, we've got the uptrend line there from October around 18,000, the target line there 18,800, and longer term perhaps up to 19,700 by the end of May, as a guesstimate in terms of the arrival in that zone. But obviously getting up there after all the recent gains would be quite a coup. In terms of the downside, the 50-day line is 17,700, and that's the worst we're expecting, at least under normal conditions. Moving on to the stocks, and starting off with a new name for us, and here it comes in the form of Arrowroot. We've got a rather messy chart, and the way of dealing with such messy charts is to realize that this is actually in a broadening triangle base. So the floor of the triangle there going down towards the $8.40 level, but more excitingly perhaps, the top of the triangle there heading towards $14. We're looking for that by the end of next month, especially while we remain on the right side of the $10 mark and the 50-day moving average. Moving on to another situation of interest at the moment, perhaps not so as esoteric as the last one. And here we've got Aileron, and here you can see that beautiful progression here, a bit like the S&P, or at least a bit like the Nasdaq at least. We've had the shares above the 50-day moving average since November. The top of the channel there heading towards the $8 plus mark, which were $8.60 in fact, which we're looking for by the end of next month, while we remain above the 50-day line around the $5 area. Star of the show at the moment, and that's been the star of the show even before it went up around the US Chartbreakers, is Kazoo Group. Here we were looking for a perhaps unlikely result, and we've actually got it in the form of the rising or the broadening triangle base. We were looking for $9 maybe by the end of next month, but obviously that's been done by the end of this month. And you can see there's actually much more gas in the tank. The favored destination now on the upside, now that we're already with a pre-market level of $17.50, is up to $18.30, which was support for the shares back in November. So let's see if the shares can step up to the plate. Ideally, we stay on the right side of $10, obviously, in the meantime. Moving along to a stock which we covered in the past. It looks like it's back now with a decent move. And here we've got Lixt. And what you can see here on this chart is that we were looking for a revival, and we've got the revival with a massive gap to the upside. The current view is that we're probably waiting on an end-of-day close through yesterday's resistance and the old peak back in November around $4.40 to really suggest that we can head up to sort of $6 or $7 by the end of next month. But breaking that trend line there at the end of last month was the big trigger for a potential move to the upside. NewScale is next, and here you can see it's been a decent revival above the rising 50-day line. That tends to be a leading indicator. We've had also an unfilled gap to the upside yesterday. Initial target here, an old target area around $7.60, $7.70, hopefully over the next couple of weeks. Maybe by the end of next month, end of April, the best case would be up to $12, but probably safer at this stage to go for $7.70 while we're above the gap zone there around $4.30. Nutriband is next, and here we've got a nice turnaround. It's been a few days in the making, but the key here now is really for the shares to get back above the $5 level. That has been the resistance, 1 year resistance from the beginning of 2023, and looking for $5 plus while we're above the recent or the late August resistance on the way down around $3.60. So above $3.60, $5 plus hopefully over the course of the next 2 to 4 weeks. A stock which is maybe not so familiar is coming up next, Ouster, and here the picture of a sort of classic one really, with the gap through the 50-day moving average after a bottoming out process. The view at this stage is that we'll hopefully head up to the top of the range and the top of the recent rising trend channel. So that's one which is been in place since August. That's heading towards $9, and we're looking for $9 while we remain above the old February resistance, neckline resistance there, around the $6.20 level, so above $6.20, looking for $9 on Ouster. Stock we just covered earlier in the week, which is, it's always good to see them back again, is Stoke. And here, beautiful move to the upside, beautiful price action this week. The view at the moment is that we need the more time we can spend above the old resistance there from back in June last year, the better. We obviously already hit the top of our rising trend channel. I hit our target. Next level up would be the line I'm about to draw at the moment, which is a resistance line projection from back in the late summer of 2022. That's heading for $20. So basically a break of 15, and we're looking for 20 on Stoke. The next stock up is coming through and takes the form of the One Group, and here you can see that we've had the typical, as I said, typical 50-day moving average gap maneuver. The recent resistance $4.60. Above that we're looking for the turn of the year resistance around $6.30 by the end of next month, and hopefully much sooner given the gap higher that we've just been treated to. Moving on to the last two, and the first one is Verde Clean, and here hoping for a revival within this broadening triangle base. The top of the triangle there is implying a target as high as $6, which we're looking for by the end of next month, and the upside valid while we hold above recent $3.10 zone support for this market. So the charting working there, or it looks like it will be working better there. Finishing off with WeTrade, and here beautiful turnaround here, beautiful U-shaped turnaround here within a broadening triangle that we had identified obviously back in November. Top of the triangle there at $7.70, and we're looking for that by the end of next month or even sooner, while we remain above recent resistance around $4.50. That's it from me today. More updates over the weekend.